Welcome to USAWatchdog.com. I'm Greg Hunter. Thank you for joining us. We have a return visit by a guest we just had on about 6 weeks or so. He is a expert in cycles, in charts, in gold. As a matter of fact, his website, gold2020forecast.com. I'm talking about Bo Polney. Bo Polney, thank you for joining us today on USAWatchdog.com.
Greg, thank you for having me back. Appreciate being here.
Last time you were on, you said the stock market would sell off, and it did for a while, and then now it's kind of popped back up. So whatever, call that Fed manipulation. Why don't you talk about that? And then you said gold would not go down. Some people were nervous about gold's rise, and you said it won't go down. It was at 12.10 or so, and you said it would go up from here. It went up to 12.87, 8, 9, something like that. Now it's back down a bit. But it's still up about 20, 30 bucks, but it hasn't actually blasted off. Well, let's start with the stock market. Why didn't it sell off?
We had a cycle turn for the stock market on the first week of March. So we had March 8th as our actual turn down the stock market. The stock market itself has been pretty fascinating. We've had I think we're at turn number 36 that were for the past year have been extremely accurate to within about a week. This is the only turn that we basically had an extension of 3 weeks in the time frame. But here's the thing. The next turn, even though it turned and it's gone sideways, and here's the thing, I did it on my stock update yesterday. The U.S. market and China are really the only two markets that have gone up, and it's roughly 3 to 4% since our turn date, okay, on the stock market. All the other world markets, anyone you look at, have either gone flat or actually lower than the turn. So it's actually, so people forget that there's the rest of the world. And, so the U.S. is looking, oh, my God, it's just, the U.S. has gone up. Yeah, but the rest of the world has gone flat since our turn or down. So the U.S. is the only market that's gone up 3%. And I have a mathematical formula, calculation I'll show you in just a second. But go ahead and ask your question.
Well, let me interrupt here then. A lot of people are saying what you're saying. They're talking about the Fed death cross. They're saying that they don't believe in the market. Other people are saying sell every rally. So you're not a lone voice in the woods, with the stock market. But you think overall the market is doomed to go much lower.
Well, yes, absolutely, and I'll show you some charts in a few minutes on that. But here's the thing. You see, ever since our March 8th turn on the stock market, like I said, it's irrelevant that it's gone up for several weeks because the only market that's actually done that is U.S. and China, like I said earlier. The rest is sideways to down. But the point is our next cycle is a low. Okay, so it's down, and it's not like next week. It's a little ways out. I remember we talked in the interview, and I said that low is not going to come in until summer, but it'll be all happen, and it'll be all over before October. Remember those words, okay?
Yeah, you said it's going to crash.
So because, we've got, 2 to 3 weeks to the upside, big deal. It didn't change the pattern. But here's a cool thing. So what I ended up doing, I said, okay, I'm like, well, why didn't it? And so what I did is I went back and I did some calculations yesterday. And what I found was actually pretty incredible. So I want to show you this, okay? Check this out, okay? Look at the balance and the symmetry. And this actually, remember we talked about, I used Daniel's timeline for calculations, okay?
Yes.
Well, what happened was, so what is the U.S. market in? It's in a bear trend, and a bear trend has lower highs, okay? So right here, the black arrow, that's July. This is November.
Lower high.
And this is yesterday.
Yeah.
Okay, last week, actually. This is last week. So this was, this was last week. And so what is that, Greg? It's a bear.
It's a trending, a pattern of lower highs.
Lower highs, right. That's a bear trend, okay? And so check this out. Now let's throw some Daniel's calculations on that. You have, so remember a long time ago I've shown, if you watch my videos, how I calculated the exact top on gold. I added 1,267 days, and you basically calculate from a high to high, and boom, you nail the day. Well, check this out. You drop a zero, and you got 126 days, plus a 3, 126 days, and boom, you land to today, the market's end.
Okay? That was last week, Thursday or something.
I'm sorry, yeah, so last Thursday.
The end of the month.
Sorry, end of the month, yeah. So the markets are done, and it's lower high, lower high, lower high, and a mathematical perfection to completion. It's finished.
A lot of people are very worried about the stock market, so you're not out there. You come up with the same conclusion in a little different way with your cycles, but a lot of people are saying the same thing. Gold. A lot of folks were saying it would sell off. You very adamantly said it will not sell off. It'll be blue skies from here. Now, it didn't take off. Like you said, it was up $80, so which is 10%, and then back down a little bit. What's going on with gold?
Okay, gold is actually rather First off, the bottom's in. I don't care what anybody in the world says. They're all going to be wrong. If people are not buying gold, like I last said, have your gold by the end of February. Why? Because the bottom line is whether they hold it back and it takes off a few days later or a few weeks later, it doesn't matter. Very soon you won't be able to get it. Okay, it's going to go ballistic, and people are going to miss out because when it goes, it's going to go so incredibly quick. Everyone's not going to have the opportunity to buy it. And right now you've had a whole month of March to get your gold. And like we said, it's not going to go down. So the people who are looking at the COT numbers as an example, right? Well, they've used them for 4 to 5 years. And guess what? Yeah, they've been doing it right 4 to 5 years. But now those COT numbers, they're looking at them. They're going to, gold's going to go down. And that's kind of the main reason I think people think gold's going to go down, because they're scared. But when we spoke, remember I said blue skies because it took out the 600-day moving average. When you take out a 600-day moving average, it hasn't done that in 5 years. And it hasn't come below it. It bounced off at one time and it came right back up. So it's been trending in a channel sideways for the entire time since we've talked. So that's why it hasn't come down. If anything, it's been trending sideways, and I just wanted to show you one.
It is up since the interview. You said it wouldn't go down, it would go, you said it would go way up, but it didn't go way up. So again, that's a little wrong.
Okay, and let me show you what happened, because, you see, I have a low in December, which we call the exact date mathematical calculation on that one. I'll explain in a few minutes how we did that. Then from this point, we have an upcycle, and it's through March. So the fact that it didn't break out in March, it's still going higher. So it's just a matter of where the explosion is. So that's what everybody's missing. They're like, it didn't break out, but it's still gone sideways. It hasn't crashed because it's in a bull market. The COT numbers are going to be nothing but an absolute short squeeze on the world. And so the ones that are holding shorts they're going to flee like there's no tomorrow on those COT shorts, because the market's not going down and it's going to explode. And that's why the move's going to be so biblical in gold and silver, because of those COT numbers that everybody considers to be bearish, but they're actually what's going to cause the short squeeze.
You're not alone there. Jim Rickards, who's going to be a guest on this show, best-selling author of Currency Wars, and he's got a new gold book out, and he says almost the same thing you said, that there's going to be a point where you're just not going to be able to get it. I mean, it's going to go up so fast, so wickedly fast. I think the sellers, the big gold dealers, are just going to play the market with their inventory. When they start seeing these big days, you are predicting big days, will just shut down selling because they'll play the market with their inventory, right?
Yeah, I was talking to one of my dealers who actually I buy a lot of stuff from. He goes, yeah, because I told him where I'm at, because every time I go there, everybody wants to say hi. But it was funny because he says, yeah, when this happens, if you're right, I hit a button and I turn my computer off. So my site just goes down, and I said, just make sure you take care of me and my subscribers. But the point was, he can turn it off. And then he was going to turn it back on when the price, levels off like a few weeks or something later, because why would you sell when you can make, some gains like that, So you're right. I think a lot of dealers are just going to turn off their computers and not let people buy gold.
So go ahead.
I just wanted to touch base on gold one last time, because this is kind of fascinating.
Oh, we can do more than one time. Go ahead.
So check this chart out. What you're going to see is a blue post. Okay, you'll see a flag. Yep. So when we talked, it broke out of that flag. Okay, so that's called a flag formation. Gold was supposed to break out of this flag and go vertical. So on our interview, this was supposed to happen. Well, it only got to about there. Okay, it didn't go boom. It just went up. Okay, and it stopped. And then what happened was it turned back down, and now from a flag it turned into a pennant. Okay, so now we've got a flag to a pennant. And so now, and today, basically at the end of this week, at the end of March, check it out. It's sitting right there.
So it's ready you're saying, again.
It's ready to launch. It's ready to launch. And on top of that, you've got a double spring formation. This is a spring, and this is another spring. So you've got a double spring built up into what's going to end up as an explosion. And now this is the craziest part. Check out silver. Silver, you got a wedge that is 5 years long of price suppression, and now you got a pennant and a flag formation sitting right at the point of here, and all that's left is literally, when you break this wedge, all you're going to see is limit up, limit up, limit up. That's all that's going to happen when this thing goes. It's going to be limit up. Those COT numbers are going are going to basically be nothing but the reason for the limit up days when gold just goes completely vertical, and everybody who is waiting for $1,000 gold basically is going to be spending exorbitant amounts of money to buy it, period.
There's some people I can't really go out with this, but there's some people on that have written me on the site, bankers, and they don't want to use their name and they don't want to whatever. But one of them had a very interesting take, and he said he worked for one of the big banks. He said, I can't give my name, I don't want to be fired. But he said they're gonna turn this around. They're gonna turn it around and basically use gold and silver as a giant credit default swap. That, in order for that to work, the price has to go way up. So that's just a little reverberation. I can't confirm that. It's just somebody who wrote me an email with a good email. I could write him back. But you're saying is it going to be driven up in your estimation? Is it going to be forced? In other words, are the bankers going to turn it around and force it back up to make some money? Or is it going to be just market forces, or both?
It's either going to be, the two words are intentional or unintentional. And I have no answer for that. But it'll be one of the two. So the markets and silver explosion will be either done intentionally, and the manipulation was done to cover up, so everybody was out of the market, and basically it happened in too quick a time for people to get in, or it was done unintentionally by some factors, forces of nature that caused this, like a biblical event. I don't know. I can't answer that question, but I can tell you the math calculations I just showed you using Daniel's timeline for the stock market. Those are mathematical calculations based off, it's numbers used out of the Bible. So I don't know what's about to happen, but I do tell you that the last day of March is critical for the world. It's a beginning and an end.
So we are at the end of one cycle and beginning of another cycle, and you're saying the cycle for stocks, and I want to just get with that real quick before we move back into gold. We talk about, because they're both kind of interlinked. So you have this, what I hear, this jaws of death pattern that you labeled. You sent me this picture, and explain this for me.
Okay, so what you're looking at right there is points 1, 2, 3, 4, 5, and 6. If you actually slide the chart up just a little higher, you'll see a historic example at the bottom. So actually pull back a little, Greg, and go there. Okay, so there's the example, the historic example, and then if you can slide back, go all the way back again, so you can see everything. Okay, let's look at it together. Okay, so basically, the black arrow, that black arrow is July 20th, when we did our interview on True News, saying the top is in right here, right now. Okay, so there's your top. Off that top, you had a pullback drop. It came back up, and it went up. So all you're seeing is the reverberation off of that number 0.5. But what's left is that massive drop between 5 and 6.
Yeah, Bannerino has the same type of research. He did the same thing and said it ends up around 5,500 if you just draw. That's the last low. That's the first low in the .com crash, and that's the 2008 housing crash. So if you just draw the lines there, then it has to kind of end up being over here at the 5,500 level.
Right. Now keep that up for just a minute. I want to take that further because there's more. Okay. Here's the problem: is that 0.6? That's failure. And what you're going to see, if you bring up the historic example a little higher up, okay, if you look at higher up, that failure basically means it hits it, it bounces, but it never comes back up again. So that's called the Great Depression, the greatest depression in the world, because it's never, ever going to come back up to 5 again. It's over. And that's game over. So when it breaks, this event is biblical because it's the completion of the monetary cycle that I basically talk about going back to 1764. It's a 252-year cycle low. So it's a complete crash meltdown. And then in a few seconds, I want to talk also about the timing of it, because people are thinking it's going to happen several years from now. It's not.
Well, let's talk about it now. What's the timing of this big crash that you're talking about here?
Okay. Well, so I want to. Couple things I want to touch on. Number one is these charts that I'm providing you, and we're looking through, these are what my subscribers get. What I've removed off all the charts are the timing, are the dates, okay? And the reason I need to show some respect to my subscribers, but it doesn't matter. Like if I'm going to talk about there is months anyway, so it doesn't matter, but if you're a trader, yeah, you need the actual week or the day. But beyond that, it's just the generality of a few weeks here or there are irrelevant. Okay?
General terms for this.
Exactly.
We don't do traders. We're not really traders here.
Right, and so that's why I've removed the dates off them, but the charts, this is what my subscribers are getting. So I want to show you this because this is fascinating. So let's talk about this because this is probably the most scary chart of all of them right here. Okay, so what you've got there, Greg, remember the jaws of death you just showed?
Yep.
Okay, so that top line right up here, that's the same line, okay? The black line I color-coded to keep it the same, okay?
Yep.
So that's July 20th of last year, 2015. Okay?
It rolled over, yes.
Right, but now this is the
That's for the S&P. I mean, that's for the S&P. You called that on the top on the S&P.
Sure, and that. But again, what I'm showing you here is the Dow. They're all give or take a few points. This is irrelevant. The time points are critical. Okay, so now we're going to look at this is called compression of time. Okay, so when you compress time, see the jaws of death basically from the year 2000 to the year 2003, that was just under 3 years. Okay, you with me?
That was a rough 3 years for the stock market.
Yeah, exactly. Okay, now the next jaws of death pattern, and it starts in 2007, bottoms in 2009. This is just under 2 years. Here's what no one gets. They're all thinking, oh, it's going to take several years. Are you kidding me? This is what the chart is telling us. The July top came in, we're going to be around a year to the bottom, which means that between now and I'm not even going to say October anymore. I'm going to say between now and before August, we're going to see this, okay? Now, will it stop? If we go back to the jaws of death, will it stop at 12,000? Because it could. It could stop at 12,000, but I believe looking at the pattern analysis, it's supposed to go to the bottom, okay, to 5. So the point being is, it doesn't matter how you look at it. The point is, I don't care what anybody has to say with regards to the stock market because Daniel's time, I'm looking at the day counts here, bear trend. Friday, this is the end of March. Okay, we showed you this earlier, end of March. And now pattern's finished, and now we have the down wave on the stock market. And the problem is, we've got a...
hold on. Let me sum this up for you. Stop for a minute. Hold on. So the dot-com bubble took 3 years to actually from 2000 to 2003 to crash and to bottom. The second, the housing bubble, 07 to 09 only took 2 years to crash. And you're saying that these markets higher and the compression, the time for it to crash is shorter 1 year. You're giving it about 1 year to crash. So we've already topped out in your estimation in July, and you're saying by July, August, somewhere in that neighborhood, you're going to get another humdinger of a crash. That's where the crash, so it's going to crash a lot between now and August. Is that right?
Yeah, that's exactly what I'm saying. We have the time point in our stock index, but again, I'm just trying to keep it general again. So there is a time point that there's a week that's supposed to come in as a cycle low. And so until that cycle week comes in, I don't care what the markets have done so far because it doesn't matter. The cycle is down into that specific week we have, which is between now and before August, but there's a specific week we have that comes in as the exact cycle low, give or take a week. That's going to be the low, and it's supposed to be biblically bad. And considering the Dow's at 17,000, we're talking 5. You're going to have a day where the Dow might drop 4,000 points.
So let me. You're saying that the crash is going to take top to bottom from July to July or August, whatever, about a year. About a year. So we're about halfway into this crash cycle.
No, we're more than halfway into the crash cycle, and we're coming into it like soon because remember they just topped out. It just made its last higher low. So now,
could the Fed put this off? Could the Fed, cut rates to negative interest rates? Could they flood the bond market? Could they do helicopter money and prop this thing back up and distort your timing?
Well, here's the thing is we've had 36 turns that have been accurate. This last one actually has been accurate, aside from the U.S. market being up 3 to 3.5%, or say I think 3.5 to 4%, and China being up about 3%. Every other market has actually rolled over already or gone sideways. So this turn has been correct as of March 8th. Okay, and so we have the next turn, which is a cycle low, which is a crash low. And that's supposed to come in still between now, into the next few months forward. So until that time point comes in, being long in the market is crazy. And on top of that, what I just showed you with relation to, lower high, lower high, lower high, and the end of March being here, being long in the market is extremely dangerous right now. And it doesn't matter what anybody thinks, that the cycle ultimately wins.
Do you ever watch Janet Yellen? She was on last week and was, trying to talk the markets up and telling everybody she's got your back, basically. Do you watch any of that stuff, or is that to you just noise?
Well, to me, those are dates and time. So when the Fed talks, I count that so I look at where that is on the cycle, and then I basically can forecast what could happen. So the last time she spoke, I was looking at that's supposed to be an upcycle, so it was an upcycle. But the bottom line is, you need people to talk. You need people to say things, because that's what creates the cycle that completes the cycle. You see, because without events happening, the cycle can't continue. So you need people like Yellen to speak. And notice when she spoke yesterday, or the middle part of this week, you saw gold jump up in price.
Yeah, last week. Yeah, sure did.
Yeah,
I have been saying for a couple of years, every time the Fed speaks, gold goes down. Well, that pattern has been broken. The last two times Yellen spoke, gold went up pretty significantly. I mean, the time before that, it went up like $30, and then last week when she spoke, it went up, I don't know, $20. It was up pretty big, and then it sold off a little, then it's back up a little bit, and so. Do you, when Yellen is out saying to the markets, "Hey, I've got your back, and don't worry, don't listen to any of the other Fed governors. Listen to me." I mean, we have some real hawks on the, wanting to raise interest rates on the Fed, and she's telling them, "Don't listen to them. Listen to me." What does that tell you about what they see in the real world coming down the pipe?
Well, it's hard to know it's just when these people speak and they tell you, they make announcements on the news. The problem is that all of those announcements are going to tie into the cycle. And so, whether the Fed speaks or someone else says something, the bottom line is they're going to confirm the trend. And the trend is gold's going to about to blow up and take out that pennant and go vertical.
Because they're saying they're not going to raise interest rates. That's right. What you're saying. So you hear that and go, this is confirming the trend. They're not going to raise rates. Gold's going to go up.
Right. And so what happens is they do something that ultimately confirms the trend. And so the trend is up. So from the day we interviewed in February to now, gold's gone slightly up to sideways, and all we're missing now is the next leg up, which is basically what I've been talking about. We're still waiting for that explosion to the upside. So something, I'm talking like, end of March, extremely early part of April, something's supposed to happen, which is going to cause gold to again get its legs, lift up again, go higher. And with that, the stock market, starts to fall, because again, it's a downtrend line, which I illustrated a few minutes ago.
All right, let's get out a little bit. You're very kind. You sent me a chart, and when somebody makes a mistake, you own it, and you owned it in your chart. You basically sent me a chart, and I'll hold it up here in a minute. And you have 10 things that you got. 10 things, 2 of which you got wrong, 8 of which you got right, so you're 80%. But you actually said, and I'm sure you said that in 2014 gold was going to go to 2,000, and you say clearly you got it wrong. And then you said it was going to go to 2,000 in 2015, and you got it wrong. And you say that yourself. I mean, you're admitting it. And some of your critics have said, hey, it's been wrong a couple of years in a row. Said gold was going to be 2,000. How do you answer your critics, and what do you say now?
Well, here's the thing. That's a score sheet. Like you said, it's 80%. That's not bad. That's actually pretty amazing, considering you're forecasting the future, number one, which is kind of crazy. But let's talk about that, okay?
Well, just so people know too, like a lot of people say Gerald Celente never gets anything right, which is incorrect, because he has his newsletter and everything's written and dated and whatever, and he can do it. So people say that, but you do the same thing. Everything's written out, everything's dated. You got times where you send out reports to people, you have to pay for them. And I'm on your list, and thank you very much. You give it to me gratis as a reporter for me to look at, and I don't trade, so I'm not going to make any money on it. But anyway, the long and short of it is that explain, what do you say to your critics when you say, I did not get the 2014 gold at $2,000 in 2014, and I did not get the 2000 gold in 2015 right. I got it wrong. How do you answer your critics on that, and what do you say now?
Okay, so let's go. So in the year 2011, we basically nailed the exact top. And in my videos, if you've watched them, it's a 1,260-day count to the exact top on silver, exact top on gold. So we nailed both of those. Off of those cycle highs, it was another 1,260 plus another 30 days or 21 days to the exact bottom on gold. And that came on in November of 2014. And I did a specific interview on that date. It would call the exact bottom. That was like 11:30 on gold. And if you go look at gold across all the world currencies, it actually bottomed there in China, in Canadian dollars, in Australian dollars. It actually bottomed then. And so that was technically a correct call for that low. But what happened was, here's the problem. It's the Jubilee year that messed the world up, okay? You can go back and look at every analyst. I think everybody pretty much got it wrong last year in terms of what happened because of the Jubilee year. See, 7 times 7 is 49 years. And you have to add an extra year to, it's called the biblical year of Jubilee. And so gold leads the trend. And so it's so simple, the math, to explain it to you. Okay, so from November of 2014, you go 30 days forward. And what was then? On December 1st of 2014, guess what we had? The Swiss referendum, right? And what happened? Silver shot down, gold shot down, it came back up, and boom, there was the exact bottom for silver. However, then we have the Jubilee year. So how did I nail the exact date to call Future Money Trends up and do the interview with Future Money Trends on December 3rd of 2015? Last December, because it's exactly a biblical year. It's a Jubilee year. The first week of December. So we nailed it. And then since then, the bottom has been in on gold. I don't care what anybody says.
But you didn't. But hold on. But it didn't go to 2000. So people say, well, it didn't go to 2000 now. So what do you say to people that say, wow, you did that?
Because until the biblical year ended, which was December of 2015. Now all bets are off. So now we're looking for $2,000 gold.
So you miscalculated by about a year.
A whole year. But look at Jonathan Kahn and all these other people that are calling for the markets to collapse. I basically picked it up.
Well, China market did collapse. China market did collapse.
Well, I understand that, but the point is that we called after that low in December of 2014. You got a biblical year, put it to December of 2015. Now all bets are off because we got a bull market breakout. That's why COT numbers, everything is irrelevant because it's a bull market.
So,
but to finish up was because of that, we didn't get the explosion in 2014. You have to push everything over, and I caught that error in June of 2015. And that's why I nailed the exact top. And from that point, I was able to nail the exact bottom. And everything since last summer has been incredibly accurate. So we've got, since last summer, if you pull that list up again, you'll see everything's been nailed. And then, incredibly enough, they're to the day. Who does that? But pull that list up one more time, and you'll see that after that error, we basically recalculated, and starting in China, we basically have nailed everything since. So 5, 6, 7, 8, 9, and 10. We did it. The calculations are now correct. So we had to that was the whole year of recalculations, and they're there.
Okay, so let's talk about going forward. So you think that the trend for the stock market, and let's just talk in big terms because you put out dates on your own for your subscriber list, which is fine. We don't need it for that because we don't really have the traders on our site. But the overall, you're saying that gold trend is decidedly up from here. And you're saying that when the Fed comes out and is very dovish in talking about how I got the markets back and all that, that will send gold prices higher. Now, on the other side, when the Fed says that they have the markets back, are you worried that you're going to be wrong with the stock market again? And if you're not worried, tell me why.
Well, all cycle turns we've had so far, including this last one, and like I mentioned, and with relation, the only thing pushed higher is the U.S. market and China. So technically, the turn occurred and is still occurring. Okay, and until my cycle low week that I have between now and before August, there's a week that we have where all the stock index subscribers have a specific week. Until that time point arrives, the cycle's down, and that's all I can say. And on top of looking at the calculations, all that happened was until the end of March was nothing but a lower high. So right now the trend is still down. It's a bear trend. And we're expected to have reversal, and it's supposed to continue downwards. And until that time point arrives that we have later this summer, between now and August, until that time point arrives, it's very dangerous to be long in the markets. It really is. And I think something really is about to happen here and now to cause that turn in the markets.
And do you think that the things could overshoot your 5,500 range? I mean, a lot of times things don't go right to the mean, to the point. They can overshoot it. They can overshoot it on the upside. They can overshoot it on the downside. Do you think that the 5,500 number is the number, or do you think it could be overshot? In other words, it could go lower.
No, that's actually a great question, because the answer is on those charts. It's called the megaphone pattern, or they call it jaws of death. I like the jaws of death. It just gives it more, power. But the point is that 0.6, if you look at 0.6, it doesn't have to hit the mark. It can penetrate it because it's a failure point anyways. And so once it penetrates 6, and if it did, it went to say 4,000 or 5,000, it could penetrate it. It doesn't have to hit it, or it could touch it, or it can go right through it. Because the bottom line is, if you look at the rest of that trend, keeps going lower anyway. So it's years of bear market afterwards once this initial collapse occurs. It's not just hitting 0.6 and going back up again to back to new highs. No, that's a failure point. So it could penetrate 5,500 easy, and then penetrate deeper, bounce, and then keep going lower. But yeah, that is just a guesstimate in terms of numbers. First, it needs to break 12,000, and once 12,000 breaks, then then you have targets of 5,000.
And we've talked about this before briefly, but I want to, if you're forecasting that this is going to be years of bear market, this could be calamity, not just financial calamity, but it could be geopolitical calamity. Do you think there's a risk of not getting to an election?
Well, I've looked at that. Everybody asks me. I have a specific opinion about all that. I think because these are biblical times that we live in. So I think I have a time point. If you've watched my videos, it basically comes in. We've got the Chinese yuan coming on board. I think it's October 1st. It becomes actually accepted into the basket. And then I've got a time point of a little 29, which is basically I think October 2nd or 3rd. So all of those dates are accumulating right before the election, and that's a critical cycle time point. So something is happening, and I believe, when looking at what I'm telling you, if I'm right about the time compression we talked about earlier, right?
Right. It's going to take 3 years like it did in .com. It ain't going to take 2 years like it did in the housing market decline. Right. It's going to take a year.
Right. And so let's finish. I'm not finished, but I want
go ahead. Finish your point, though. I interrupted you.
No, and this is the point here. Okay, so to answer the question, if the markets do collapse to say 5,500 or 5,000, okay, what's going to happen? Okay, well, first off, before that happens, I believe you're going to get the reason for it will be because of silver or gold exploding higher, and that creates a huge derivative issue. Okay, that then triggers the collapse and the meltdown of the stock market. You see how first you get the derivative issue with a gold and silver explosion, messing up the formulas. All of a sudden, then you get the meltdown of the derivatives on the stock market and the dollar collapse, right? And then what ends up happening is that what I see when this point hits, first, so number one is, I think what I read here, so the dollar and the stocks will crash into that point.
This is before August of 2016. What's going to happen?
Well, then you get a QE4.
So wait a minute. So what's going to happen before? So you think before August of 2016, the dollar's going to collapse? Talk about that.
Because if the dollar crashes, remember the dollar, I've illustrated before, people are saying the dollar is going to go up. The dollar is going down with the stock market. It did in December of 2015. It did in August of 2015. And the dollar is falling right now again in the end of March, okay? And as soon as the stock market begins to accelerate to the downside, the dollar is going to go with it again, okay? So the dollar is going to go down with the stock market on this meltdown, okay? So what's going to end up happening is that when you hit the cycle low, well, what do they do here? QE3. Right? Well, guess what that's going to be? QE4. Okay? And then, now they're printing money like crazy. If the dollar devalued by, say, 20%, say 30%, I don't know what it's going to devalue by. Let's say it's a 20% drop on the dollar, even 10%. Everybody goes to sell the bonds. if they're only getting 1.7 yield, they're netting, if it's a 10% drop, they actually lose 8%. If it drops 20%, they lose 18%. So they're losing, so the nations of the world are losing, and this is on trillions or billions and trillions of dollars, right?
So they may be sell, everybody might be panicked.
Right. So last point is you basically got a fire sale on bonds. Everyone's dumping the bonds because they're trying to get rid of them as fast as possible when that happens, when they announce QE4.
I got it. All right. Well, listen, thank you for coming on. We'll have you on in the next few months, and we'll probably have you on around, maybe July. And you're not saying it's just going to go straight down. You're saying you're going to have this pattern of higher lows all the way down, right?
No, straight down.
Oh, you straight down. So you're saying at some point it just walks off a cliff.
Yeah.
Bo Polney. Gold2020forecast.com. Bo Polney. Hey, thanks for coming on and owning your mistakes and explaining your stuff and taking the hard questions. I appreciate it. We will have you on again. Bo Polney, Gold2020forecast.com. We'll be linking to your site for you folks. You can go to the right through, and you go to the USAWatchdog.com, and I'll put all the links to Gold2020forecast.com, and you can go on there, and there is some free information there, right?
Yeah, there's a whole bunch of videos we've talked about. Everything we've done in the interviews in the past has been uploaded to there. So there's a ton of information that they have. And honestly, what we talked about today is really a ton of information. It answers like pretty much everybody's questions. I think they should watch a video twice. And also,
thank you. Some people do that. And also, you can become a subscriber to Gold2020forecast.com, correct? How much does that cost a year or whatever?
If people are looking for dates, yes. The date, I think the 1 year that the gold is like $400, and for the stock is a similar price. So basically, it's not a whole lot of money. The people that have the exclusive of the turn dates, well, heck, if they're not the turn dates, really, if they're using the dates and people use options on them, what happens is the price becomes irrelevant, what they're actually paying because of the amount that they're making in terms of some of the turns.
Okay.
But the general person, they don't need any of that. Number one is all they need is a video that we talked about today. That's all you need.
And
if you're looking, because its information's all there. I've included the charts today, so there's nothing new in the subscription aside from the dates. And so if they need the dates, then you get the dates. But that's really it. My job, to be honest with you, I honestly feel like I really want to educate. I want to show the world what I see because this is important. What's coming is biblical. People need to understand this is just not, some crash. This is going to be some 1,000-point crash. This is not going to be 1,000 or 2,000-point crash. What's coming is going to be world changing, and it's going to come quick and fast. And what's going to rise out of the ashes is gold and silver. And if you don't have it, you're going to have a big problem.
Bo Polney, thank you so much for coming on USAWatchdog.com. Really appreciate it, my friend. Gold2020forecast.com. Bo Polney, thanks for joining us today on USAWatchdog.com and answering the hard questions. I appreciate it.
Thank you, Greg. God bless.